On June 30, HDFC Bank announced that its parent Housing Development Finance Corporation would merge with the bank to create India's second largest lender by miles. With this, HDFC Bank would get propelled to become the fourth largest bank by market cap globally. BQ Prime has consistently led the coverage on the merger, bringing you the most informed stories and opinions. Today, we are bringing you the story of the 46-year-old mortgage lender and the bank it helped create. I am Vishwanath Nair, and let me take you through the story of India's biggest merger. In 1977, after building one of India's foremost development finance companies, ICICI Limited, Hasmukh Bhai Thakurdas Parekh felt that he should do something for the average Indian. He set out to build a private mortgage lender which could provide long-term financing to middle-class Indians who wanted to build a home of their own. Thus came Housing Development Finance Corporation. A year later, in 1978, his nephew Deepak Parekh also entered the fray. The younger Parekh had left a well-paying job at Chase Manhattan Bank and joined the new firm in India at a 50% pay cut. The Parekhs then set out to build a team which could help them achieve whatever it is that they set out to do. The same year that Deepak Parekh joined the firm, HDFC went on to hire an economics postgraduate from Delhi. Renu Sood Karnad would go on to build HDFC's strong operations and rise to become managing director in 2007. Let's hear Karnad's story right from her.
It's, in a way, a little funny journey because I got this job and I wasn't looking for this job. I had a job with the then parent of HDFC. And that's where I came, was interviewed, and then I was told that this new company was being set up. Nobody knew what this company was going to be about. And before I knew, I had an offer. And so I said, it makes a lot more sense. Bird in hand is worth two in a bush. So I opted for it. I didn't know what I was opting for it at that time because I soon realized at a young age when you join how empowering this job was. Yeah. There was a social angle to it. You were helping people, a home, which is the most important asset. I honestly didn't know when I said yes to that job that what was the role that this company is going to play in creating the most valuable asset that we Indians have. And I'm so glad that I did that. So I should say, in some ways, I stumbled into something that I learned to love. Yeah. I've been working here for 45 years. I really don't know what I'm going to do next Monday because I am raring to come to work every day. But I think it's in good hands, and I'm sure that the bank is going to do a great job of it. But I've thoroughly enjoyed myself. So if somebody ever asked me, would you change anything that you've done? I honestly would say no.
In 1981, HDFC hired a young chartered accountant in Mumbai, K.K. Mistry, who eventually rose to become the vice chairman and chief executive officer of the company in 2010. According to Mistry, what attracted him toward HDFC was the fact that it was a young and fledgling firm at the time, very different compared to the job offers he was getting.
I had three offers at that time. I had an offer from HDFC, I had an offer from Citibank, and an offer from a multinational company. Citibank offer, I thought the multinational I didn't want to join because it was a very specialized kind of business. Citibank, the choice was between Citibank and HDFC. I'm a finance man, I love numbers. Yeah. Citibank I thought would be an ocean, a huge organization, massive organization. I would have a little small role to play in that. So I chose HDFC because HDFC was young, fledgling, growing at a very rapid pace. The need for housing finance in India in those days was paramount because there was no formal system in India for anyone to be able to avail of a housing loan. So I chose HDFC, and frankly, over 42 years, I've never regretted it. I've had other offers, many other offers, not one or two, many offers, attractive offers, paying me more salary, paying me more income, but the work atmosphere in HDFC all these 42 years has been fairly informal. There is a lot of comradeship, there's a lot of get-togetherness, very, very little of politics. So there is a good feeling when you come to work.
HDFC's rise in housing finance was phenomenal over the years. Not only has it consistently maintained its position as the largest player in the market, it has also fostered the evolution of housing finance as a distinct business.
When we started, actually people laughed at our chairman, the then chairman H.D. Parekh. Nobody is going to give you back money. We had no foreclosure laws. He bet on the goodness of the Indian middle class, that if they are giving money, they will return it, with no laws. That is literally, practically no. Of course, you could go to the courts and that would take you 15 years.
Yeah.
That faith in the middle income India was absolutely amazing. But as we were growing, as things changed, and even our country's changed hugely. We all know that the way principles, what our parents and our grandparents held, have been diluted to some extent. So we really worked so hard to get the foreclosure laws. So that was a huge development of the sector. It was not for HDFC, it was of the sector, actually. The products that we came up with, there was a product that you could have just given a loan and got your money back in 15 years. But then you realize over 15 years, people start earning more, or people start earning less once they retire. So the new products that we got in, albeit some of them we learned from the foreign markets, from the British markets, the UK markets, the US markets, but we got them into the system where people could get higher loans, could, play with the installment based on their incomes. So I think there was innovation of the product at every given time to suit the need. And that really happened down up. The customer talked to our frontline. The frontline said, this is what is the demand. And that's how we very quickly, see, one of the things is we are a very small organization.
Yeah.
And decision making is very quick. We are very agile. We don't need too many boards and too many things to take decisions.
Yeah.
There's a board, and there's below them there's a management. And if a decision has to be taken, it can be taken very quickly. So we came out with products, we came out with methodologies of doing it. And then towards the last 10 years, with technology becoming so important, we actually invested in the best of technology that we could get. Whether it was for our home loan borrowers or for people who were coming and putting money with us.
In the early 90s, the consumption story of India was taking off. As the economy opened up, the population started becoming more global. Not only did people get a taste of the good life, but their needs started growing as well. So while HDFC was funding their homes, the customers wanted car loans, personal loans, credit cards, consumption loans, among all these other financial products. To provide for this, HDFC applied for a newly liberalized banking license in 1994 and got one too. And thus, HDFC Bank was born. Under the leadership of Citibank veteran Aditya Puri, HDFC Bank quickly rose to become one of the biggest names in private banking. Along the years, HDFC also founded its mutual fund, general insurance and life insurance businesses as customers demanded more financial products.
In the 90s, the early 90s was a time when the Indian economy really opened up. If you recall, 1992 was the year when a lot of reforms took place. And that's the time when the government permitted private sector companies to get into the banking business. We applied for a banking license because what we could do at HDFC was only providing housing finance. But we had such a strong bond, such a strong equation with our customers by that time that we thought that why only provide them housing loans? Why not give them car loans, consumer loans, a variety of other products? And we couldn't do that from within HDFC, so we set up a separate entity, which was HDFC Bank. And then in the mid-90s, there was a committee which was set up. I remember it was the Malhotra Committee. And then by 2000, the insurance sector was open. So we applied for a license to start a life insurance company, got the license, and obviously there's been no looking back after that. And then as the financial sector in India progressed, we got into all the different financial services business. So today we are in practically, not practically, I would say in each and every financial service business that is possible, whether it's banking, life insurance, general insurance, asset management, education financing, real estate funds. The only thing we are not in is a sort of a reinsurance company, which we, for a variety of reasons, never thought about.
On April 4, 2022, speaking to a stunned group of reporters, Deepak Parekh announced the merger of the mortgage lender with HDFC Bank. It took about 15 months to officially close the merger, with the two entities becoming one from July 1st. Through this merger, HDFC Bank's loan book is set to increase to nearly 20 lakh crore rupees. Its deposit base will rise as well to a little over 20 lakh crore. The merged entity will have a customer base of around 8.8 crore customers. Its branch network will expand to over 8,000 and its employee base rises to 1.75 lakh. The merger will also shake things up from a stock market's point of view. Not only will HDFC shareholders get HDFC Bank shares, but Indices will also go through changes. My colleague Hiril Dadia joins us with some of the answers.
Thanks, Vishy. Absolutely. Index providers will be replacing HDFC with an ad hoc stock a day prior to the ex-date. Now, as HDFC and HDFC Bank will merge, Indices have actually found the replacement for HDFC Limited that will cease to trade on stock exchanges. Now, what would happen in a normal course is that stocks would be added or deleted from Indices every 6 months. Now, the next review actually is scheduled for September, with the cutoff date being July end. Now, this is interesting for HDFC Twins, reason being that the last date of trade for HDFC, which is the 12th of July, this means as on closing of trading hours on 12th of July, it will be delisted, and from 13th, it will not be available to trade. From an F&O perspective, also F&O trades will expire on the 12th. That is, the contracts will be settled on, basis settlement price of HDFC in the capital market segment on the 12th of July. The pay-in and payout of final mark-to-market settlement of all the futures contracts shall be basis T+1 settlement, which is the 13th. Now, let's move on to another interesting part as to who is going to actually replace HDFC on the various indices. Let's look at the Nifty pack first. LTI Mindtree on Nifty 50, GSPL on Nifty 100. Moving on, LIC Housing Finance, Poonawalla FinCorp, Phoenix Mills, Brigade Enterprises, Ambuja Cement, and you have a Mankind Pharma, which will be replacing HDFC on various indices. Moving on to the Sensex as well, you have JSW Steel, which actually replaces HDFC on the Sensex, but names like JBM Auto, Zomato, Apollo Hospitals, TVS Motors, Apollo Tires, and Hindustan Aeronautics will be replacing HDFC in terms of the other indices. Lastly, now 17th July is going to be the tentative date with regards to the merged entity. So what this means is that the merged entity will start trading from the 17th of July. So that's what we will be watching out for. Back to you.
Foreign investors are major stakeholders when it comes to the HDFC Twins. Post the merger, HDFC Bank becomes an entirely publicly held company without any distinct promoter. At HDFC Bank, the foreign shareholding is expected to expand further. Sajit Mangat joins us to explain the dynamics here.
Thanks, Vishy. Foreign investors will play a critical role with respect to the merged entity because the kind of headroom they are going to have and the kind of stake that they are going to have. If you look at the headroom at the time of announcement, it was around 15%. That rose to nearly 18%, and that's primarily because HDFC had a foreign portfolio investor holding of 68.7% in April last, and that has fallen to 64.6% at the end of March this year. And HDFC Bank, which had 68.7% for FPI holding in April last year, it has fallen to 65.7%. So that increases the headroom from 15 to nearly 18% when the combined entity is going to list in middle of July. Also, it's important to note that ETFs or the exchange traded fund will be owning nearly 11% in the company. You have ADR holders who will own nearly 13.7%. Retail and HNIs will be holding only 10.5%, and insurance companies will be holding 8.25%. So overall, if you look at the kind of active investor holding in HDFC Bank, it's going to be around 55% active investors, and 10% odd or 11% odd would be ETFs.
Analysts note that the merger creates an entity which investors can strongly back. While return ratios will likely get impacted for 1 or 2 years, the operational leverage will eventually bring them back. HDFC will also vacate the non-bank market, opening up new opportunities for newer lenders.
The synergies are tremendous for the merged entity, and if you look at post merger, the chances are that the overall the cost to income ratio would come down to like almost 30% as the management has guided over next 10 years. While gradually, though like the return ratios, that is ROE, that would probably like get impacted marginally for over 1 to 2 years, but then gradually it would improve as the operational leverage kicks in. So there are a huge potential for both the companies. Together they can tap each other's clients and grow multifold. So definitely a hold for the merged entity.
As a bank shareholder, I think if you have a long-term view, I think it's a fantastic thing. There will be short-term challenges on the SLRs, CRRs, and things like that, and there are some challenges on divesting of certain assets in a certain specified time as warranted by the regulator. But these are very short-term issues. I think if you look at a 6 to 12 months time horizon, it's a great thing which is happening to HDFC Bank and for HDFC Bank shareholders. Also from a HDFC Limited shareholder point of view, this is probably the best option for them, and that's what is happening. So I don't think there is any cause for complaint. Little bit of turbulence, little bit of volatility, which we have seen since the the merger was announced. I guess it was par for the course.
Valuations are fair. The challenge is the base effect. I think when Mr. Jagdishan says he wants to grow, then he wants to create a HDFC Bank every 4 years, which means he's targeting 18% type of growth rates. And while that has been historically true, he has been able to clock that high teens kind of growth rates. I don't know at such a base effect whether how long that is sustainable. So, but anyway, I think it's great news for shareholders like us. A disclosure: we and our clients are invested in HDFC and HDFC Bank. I think who isn't is the question we have to ask over here. So I think it's a great target, and it's not a guidance as I understand, but certainly in this country it is possible because you have the GDP at nominal rates or other at market prices growing in the 10, 11, 12% type of a range. And overall bank credit does grow at 1.5 times the GDP. And then HDFC Bank combined certainly will grow faster than some of the PSU banks and some of the other smaller banks. So from that point of view, it is theoretically possible for HDFC Bank combined to grow at that 18% plus type of a growth rate. And mind you, if they do that, can you imagine what kind of returns that they can generate? Because even if you assume that the price to earning, price to book remains constant, that's the minimum return that you can expect, because 18% growth in credit will translate to around the same level at the bottom line for the company. And mind you, their NPA management has been fantastic. I've never seen a quarter where NPAs have gone completely out of control and resulted in sharply lower net profit growth as compared to credit growth. So I think it's a great investment from a long-term perspective. And as I said, I think a lot of funds, a lot of investors anyway have HDFC Bank in their portfolio, and now all the more reason. Also, I think its weightage in all the indices is going to move up. So from a benchmarking perspective also, one needs to have an investment in HDFC Bank.
India is all set to witness the emergence of a new banking behemoth, which is well placed to tap into all possible customer needs. It also creates an opportunity for HDFC Bank to chase infra loans, something it has largely stayed away from. As this entity chases its potential, we at BQ Prime will continue to bring you the news and views you need, as we always have. So stay tuned.